Hello, this is Deborah Williams again from A Key to a Way Out, the founder and CEO at A Key to a Way Out. And today I'm going to talk to you about building your credit score. Now, a couple of weeks ago, I did a video on so you think the fact that one of the things you need to consider is reviewing your credit report. Now, when you review your credit report, you're going to fall into one of three categories. Number one, you have a credit score of 680 or better, and you can qualify for the house. Number two, your credit's good, but it's still not where it needs to be. So you need to build your credit. And number three, you need credit repair. So whether you're buying a house or not, at some point in time, you're going to need some credit. And I'm not advocating that you you get wild and, get a bunch of credit. But the thing that I do want you to think about is that unless you have a bunch of money, a ton of money, and or you are really, really disciplined, you can save and for those major purchases and get it done. And most of us are not like that. I know I'm not. But anyway, at some point in time, you will need credit sometime in your future. So now is the best time to prepare so you can start building the things that you need that the creditor will be looking for. Now, my goal here today is to give you some valuable information on how to build your credit. What I'm asking of you is once you've watched the video, give me some feedback. Let me know if the information that I gave you was valuable or if there was something that I could have done to enhance it or make the information more valuable to you. So please leave comments below once you've watched this video. I really appreciate your feedback. But let me get started. Now, the first thing I want to do is define to you credit. Credit is the ability to make payments over time. The key word is over time. So what you'll find, there are a lot of people who do not want to owe anyone. I'm one of them. But yes, I've had some credit. They don't want to owe anyone, so what they do is even if they don't pay for something immediately, they pay it off quickly. And although that's a very good habit, if you're going to need to build your credit, that's not going to accomplish your goal. So here's my suggestion to you. My suggestion is to obtain a low limit credit card. When you get this low limit credit card, you're not going to use it to make a frivolous purchase. Let's say you got a $300 credit card and you use that credit card to purchase gas. Now, one of the things that helps in the computation of your credit score is your debt to credit limit ratio. So what you want to do is to not raise your balance or allow your monthly balance to be more than 30% of whatever the credit limit is. So for this $300 credit card, the most your monthly balance at the end of the month before the bill comes out, the most your monthly balance should be is $90. So even if you've charged more during the month, before the bill comes out, make sure that your balance is no more than $90. What this does is this helps to quickly build your credit because you're going to pay it over time, over time, over time. You're not going to pay it off because what you want to do, first off, by having the balance no more than 30%, you are building your what they call debt ratio. Your debt ratio accounts for 30% of your credit score. So this is something that you can easily control with one credit card. Don't go wild. Buy you some gas. and let that just be your gas credit card. You're going to buy it anyway, so you know you have the money. So there's no reason whatsoever for this credit card to get overloaded. Okay, so you're going to use it to buy gas. You're going to purchase or make sure that at the end of the month or whenever the due date is on that bill, so you must be aware of your due dates, that you have no more than $90 on that account when the bill comes. Consistently doing this helps to build your credit ratio. That's 30% of your credit score. That is going to be accounted. It's going to look good because you're paying on a regular basis. Paying on a regular basis. You are paying on time or before time, preferably before time, because the next thing that the creditors are going to look at is your payment history. Do you pay timely? Although you're paying over a period of time, are you paying on a timely basis? Never, ever, ever, ever be late paying this credit card, because you're trying to build good credit. You want the creditors to know that you are responsible. So be quite aware of what the due date is. If you can pay it before the due date, please accomplish that goal. Do not pay it off. Keep stringing it along, because again, the next thing, the timely payments, they account for 35% of your credit score. So we've got the debt ratio, that's 30%, the timely payments, and it's totally within your control. You just have to pay attention to what you're doing. One thing that you must be careful on, since this is such a low balance credit card and the payments are low, if you have it set up on automatic payment, make sure you look at your bill, because you may raise the limit slightly over what it was the month before, and your monthly payment can increase. Even if it increases $1 or $2 and you pay your normal credit, say for instance, you were paying $25 a month, and for some reason it raised to $26 or $27 and you didn't notice it. So the automatic payment of $25 went out. Well, guess what happens? They're going to charge you a late fee. They're going to charge you a late fee, a $35 late fee possibly, and the difference was $2. Now you have a late payment on your credit record. So please, please, please monitor the bill. You do not want $2 to throw you into a chaos, because that's what happens when you have late payments. Okay, the next thing, credit history. Creditors want to know, like I said, that you are able to pay, you have the ability to pay over a period of time. The longer the period, the better it is for you. So let's say once upon a time you had a credit card that you worked diligently and you paid off. You had a good payment history on that credit card. Under no uncertain circumstances should you close that account. The reason you do not want to close the account is because you want that to remain on your history. In fact, they even use that credit limit when they're looking at your credit limit, the balance to limit ratio. So all of that plays an important part to you. If you're new, have never had credit before, try building your credit in 6 months increments. They're really looking for 6 months to 24 months. And if you have credit that's longer than that, that is just excellent. Just make sure it is good credit. Now, the next thing is your mix of credit, different types of credit accounts. So you have revolving credit, which is your credit card. Then you have installment credit, which could be like a small loan, maybe your car loan. and your equity credit, which is your mortgage or your house. So your credit cards, we've covered that. The small limit credit cards, the low limit credit cards that you have only 30% on at most for your monthly balance, and you're paying it consistently. Now, for a revolving, installment credit, you may want to consider a credit union. So if you don't have one at your job, there are credit unions around the city that you can join and become a member, and a lot of them will often offer what's called a credit builder loan. So this is also to help you build your credit. So now you have an installments type loan and you have your credit card loans. Another good thing that you could use to build your credit, let's say that you don't own a home, but you're renting and you're pretty consistent at paying your rent on time, meaning you're not paying late fees every month. You're paying your rent on time. So you've built a good credit history with your apartment complex. So try and report to have that on your record. The last thing, the mix of credit. The mix of credit, installment loans, revolving credit, that accounts for 10% of your credit score. Let me go back. Your credit history accounts for 15% of your credit score. And finally, credit inquiries. Now, although you're trying to build your credit score, and I did talk to you about getting a low balance, a low limit credit card, you don't want to have a lot of inquiries on your credit report. What you may not know is that you can pull your own credit report. When you get these promotional advertisements in the mail, you'll see that people have pulled your credit report. And also, if you already have some creditors, they may pull your credit report to do a regular review to see how you're doing. Those things do not count against your credit score. But let's say you were trying to get an insurance policy, you just moved into a new apartment or some new place and you had to get your utilities turned on, or maybe you've gotten a new job. These things do count against your credit score. So you want to always monitor the inquiries on your account, because you want to limit it to no more than 3 to 5 in a year. 3 to 5 in a year. So let me recap. Number 1, get a low limit credit card. Pay it on time. Make sure your monthly balance does not exceed 30% of the credit limit. That's 2 things. That's your debt ratio and that's your payment history. Number 3 is your credit history. Making sure that if you have good credit established, that you do not close the accounts. Keep them there, because creditors are looking again for your ability to pay over a period of time. Number 3, your mix of credit, revolving credit accounts, which is your credit cards, an installment loan. Like I said, join a credit union. When they offer these credit builder loans, which are small loans that you can pay off over a period of time, and usually a credit union will give you a pretty good rate if you're a member, then those things help to build your credit. Again, get it for something that you are going to pay anyway, if that's at all possible. And last but not least, minimize credit inquiries. A good way to do this, again, is with the credit union. Let's say your intent was to purchase a car. Get pre-qualified, because if you go from dealer to dealer to dealer, each one is going to pull a credit report. So go through your credit union, get pre-qualified. The report is pulled one time. So that minimizes your credit inquiries. Now, As I said in the beginning, my goal is to give you valuable information on how to build your credit. I hope that I have accomplished that for you today. Please leave me comments below to let me know what I could have done differently, if the information was valuable to you, and what I could add to make it more valuable. So I want you to have a great day and build your credit. Again, this is Deborah Williams, founder and CEO at A Key to a Way Out. Have a great day.